In the world of corporate finance, terms like net interest expense and net interest income are pivotal in understanding a company's financial performance. Today, we explore the scenario where a company experiences a positive net interest expense alongside a negative net interest income. At first glance, these terms might seem contradictory. However, let's break them down to see how this situation can unfold and what it reveals about a company's financial health. Net interest expense arises when a company's interest payments on its debts exceed the interest received from its financial assets. It's essentially the cost of borrowing money. On the contrary, net interest income usually indicates the company earns more from its investments or financial assets than it pays in interest on its debts. So how can a company end up with a positive net interest expense and a negative net interest income? Well, this scenario often reflects a company heavily reliant on debt to fuel its operations and growth, particularly in capital-intensive industries like manufacturing or large-scale infrastructure projects. Imagine a construction company that borrows significant amounts to finance new projects, or a tech company investing heavily in research and development through debt funding. These strategic decisions lead to substantial interest expenses that outweigh any interest income generated from smaller investment streams. Another factor could be the economic environment where low interest rates prevail, reducing overall returns on investments while the cost of existing debt remains fixed or even increases. This dual state impacts a company in numerous ways. High interest expenses strain cash flow, especially if earnings aren't meeting expectations. Companies might need to reassess debt levels or refinance to alleviate the burden. Simultaneously, they should seek to deploy their assets more effectively, optimizing returns and striving for a balance between leveraging debt and generating investment income. In summary, having a positive net interest expense and negative net interest income can indicate strategic borrowing, but also highlights the need for acute financial management. By understanding these dynamics, investors and management can make informed decisions to steer the company towards greater stability and growth potential. Thank you for watching, and stay curious.